All right, today we are going to tackle a problem that every single trader runs into. When is the perfect time to get into a trade? We're going to break down 3 really powerful, actionable setups that can help you get in on the action at just the right time, using a tool that, honestly, the big players don't want you to know they're using. You know the feeling, right? You're staring at a chart and you're just paralyzed. Are you too early, or even worse, are you way too late and about to get caught? It all comes down to timing. But what if you could see the market from the perspective of the institutions, to see the exact levels where they see value? Okay, let's dive into our secret weapon here. It's called the Anchored Volume Weighted Average Price, or AVWA. Now, forget all the complicated jargon. Just think of it like this. It is the fair price of an asset starting from any point on the chart that you choose. And trust me, this is not just some random line. It's a level that algorithms and huge institutions are glued to. So what do we actually mean by fair price? Well, understanding this one little concept is the absolute key to getting in sync with the market's biggest movers. This quote really hits the nail on the head. Look, our goal as traders isn't to try and outsmart the market. It's to find the river, see which way it's flowing, and just jump in. We want to align ourselves with the institutions that have enough money to create that flow. And the AVWAP? Well, it's like a map that shows us exactly where they're getting. And the logic behind it is just so beautifully simple. Big buyers, they don't want to overpay. They're patient. They wait for the price to pull back to what they consider a fair deal, and that's the VWAP line. On the flip side, sellers don't want to get ripped off by selling too cheap. They wait for the price to rally up to that very same line. So the VWAP basically becomes this gravitational point, this magnet for both buyers and sellers. All right, let's get into our first actionable setup. This one's the most straightforward, and it's all about anchoring the VWAP to the most obvious turning points you could find on any charts. The process here is dead simple. First, just scan your chart and find a peak or a valley that really jumps out at you, a point that you know every other trader is looking at. Then, you just anchor the VWAP to the candle that made that top or bottom, and you wait. You wait for the price to come back and test that level. And here's a perfect example in a downtrend. You see that major high get put in? We anchor our VWAP right there. Now, as the market sells off, the smart money isn't chasing it all the way down. No. They are waiting patiently for the price to bounce back up to their average price, their fair price, to get into their short positions. Every single touch of that VWAP is a fresh opportunity for them and for you to get in. And here's the exact opposite scenario. We get a crystal clear bottom, signaling the end of a nasty downtrend. So what do? We anchor the VWAP to that low point. As this new uptrend kicks off, the big institutional buyers aren't chasing the new highs. They're professionals. They're waiting for those healthy pullbacks right to the VWAP line, their fair price, to load up on their long positions. Okay, for our second setup, we're going to look at a totally different kind of anchor point. We're shifting from a specific price point to a specific time point, and this one is absolutely critical for anyone who trades intraday. So, why the start of the week? Think about it. Huge funds, big trading desks, they often manage their books, their profit and loss, on a weekly basis. Monday's opening bell is like hitting a reset button. It becomes their main reference point for the entire week. By anchoring our VWAP there, we're essentially tracking the fair price from a starting line that everyone agrees on. Now, this is where the weekly VWAP gets really cool. It's dynamic. As long as the price is trading above that line, the VWAP acts like a floor, like support. It's seen as a fair price to be a buyer. But the moment the price breaks and starts holding below that VWAP, that same line flips its personality. It becomes a ceiling or resistance, and now it's a fair price to be a seller. So the takeaway here is huge. This flip from support to resistance isn't just some technical thing happening on a chart. It's a signal that the control of the market is literally changing hands. When price is holding above, the buyers are in charge. The moment it breaks below and starts getting rejected from that line, you know the sellers have taken over for the week. Okay, on to our third and final setup. Now this one's a little more advanced, but man is it powerful. We're going to combine the VWAP with another tool to find the exact spots where institutions were quietly building their giant positions. So for this, we use something called a volume profile. All that does is show us where the most buying and selling has actually happened. We're looking for these areas where the price went sideways for a while, but a massive amount of shares changed hands. That's not random noise. That is where institutions are accumulating a huge position. Then we anchor our VWAP to the candle that finally breaks out and starts the new trend from that zone. The logic here is just airtight. That high volume sideways action, that's the launch pad. That's where the big guys placed their bets and took on their risk. So by anchoring our VWAP to the beginning of the trend that comes out of that zone, we are tracking the average price of those enormous trend-starting positions. Now check out this example. The market chopped around sideways in a tight little range, building up a ton of volume. Then, bam, a huge sell-off kicks in. We anchor our VWAP to the start of that downward move. Now think about it. The institutions that sold in that choppy range are going to defend their average entry price. They will see any pullback to that VWAP as a fair price to add even more to their short position, helping to push the market even lower. So we've gone through 3 pretty distinct setups. But what's the common thread here? What's the core idea that you can take with you and apply to your own trading, like today? It all boils down to this. Using anchored VWAP successfully isn't about finding some secret, magic setting. It's about anchoring it to moments on the chart that matter to everyone. A huge swing high or low, the start of the trading week, or the birthplace of a big institutional move. From that anchor point, the VWAP becomes the fair price, and our job is simply to trade pullbacks to that price, in the direction of the main trend. We're just asking one simple question. Where did the big money get involved? And there you have it. 3 distinct, logical, and totally repeatable setups. You've got the swing point, the weekly start, and the heavy volume zone. Each one gives you a clear framework for finding high probability entries simply by aligning yourself with the market's most powerful players. So I'll leave you with this final thought. This isn't just about memorizing setups. It's about learning to see the chart in a new way, in terms of these important moments. So the next time you pull up a chart, ask yourself, what point here, what moment in time matters to everyone who's watching this right now? Because that, right there, might just be your next great anchor point.